Are you ready to take control of your wealth and design the life you envision for yourself and your family? Welcome to Wealth of Insight with Austyn Whittenburg from Whittenburg Wealth Partners. Austyn guides you through the entire planning process to help you build a plan that seeks to protect your financial future. He empowers you with creative investment opportunities and planning ideas to help you understand and achieve your long-term goals. It's time to gain confidence in your financial future. Now, on to the show.
Welcome back to the Wealth of Insight podcast. I'm your host, Austyn Whittenburg. And today we're going to be talking about the value of financial advice, right? So most people, I'm a financial advisor. Most people, when I talk to them about what I do, almost all of their questions are related to investments. And while certainly investments are a part of what we do, there's really a lot of other places that we add significant value that maybe we don't add as much on the investment side of things, but that just seems to be the sort of the prevailing thought of what does a financial advisor do? Well, they manage investments, right? So, and there are really, let's call it a few different types of financial advisors. The first would be a stockbroker, who is somebody that, all they are doing is buying and selling stocks for their clients. That is not the way that we choose to operate our business. We really consider ourselves total wealth managers, manager of your entire financial picture, not necessarily just are we buying or selling stocks today? What is it that we own? What do we need to be doing? And there's really, like I mentioned, a lot of value that we can add in other areas. Vanguard, who's traditionally known as one of the cheapest, lowest cost investment advisors, each year, every couple of years, they put together what they call their Advisor Alpha. And they break down all the various elements of what an advisor does and how much that may add or detract from your overall return, right? Is this advisor actually adding value to your financial picture? So we're going to go through some of those areas today and what they cover and how much they think they are worth. Okay, so what is it that advisors do other than manage investments, right? So the first thing is personalized financial planning. So the top tier advisors, we certainly like to think we're in this category, are tailoring plans that are designed to fit your specific investment goals. This is not a one size fits all. Everybody that comes into our office that we meet with just gets the same sort of thing. This is specially designed around your goals, your objectives. What is it that you're trying to accomplish and your specific situation? So this, how much risk are you comfortable taking from an investment perspective? When do you want to retire? What does retirement look like for you? What does your estate plan look like? Do you need more advanced estate planning, or is a traditional will and trust going to be good enough? What's your tax situation? What are you doing to minimize taxes? Are there opportunities there? And all of those things are going to look different depending on your career, your family situation, and various other factors. So that personalized financial planning really, I think, becomes the core of what we do, even more so than investments. So if you look at Vanguard's report that they put out, they look at, what is this financial planning worth? There's a few different ways that they break that down in their report. So they would look primarily, that ends up being, let's call it a spending strategy, or where should the money go and how does it come out? And they're estimating that financial planning alone is worth up to 120 basis points or 1.2%, which for most people is going to be equal to and or greater than the fee that you may be paying your advisor. So your advisor, if you're working with an advisor, most likely they're charging you a fee to manage their investments and to be a part of their financial plan. And according to Vanguard, if they're doing their planning correctly, that value can be worth up to, if not more than, what it is that you're paying in fees to have that plan put in place. One of the second most important things that we do is behavioral coaching. I often joke that sometimes I feel more like a therapist than I do an advisor, or that, again, back to that, what do I do all day? Just manage investments? No, really what I'm doing is managing client behavior. This, markets are all over the place. We see this every year. There's always something in the news that may be quote unquote scary, or reasons that you should or shouldn't want to invest in the market. And it's our job to help conceptualize that for you, help put it in terms that you can understand, and help interpret that and how it may impact your portfolio as well as your long-term financial plan that we've put in place. And this really helps us avoid making rash decisions, right? We often say that we diversify your portfolio in advance of volatility rather than in response to, right? We don't want to be in a situation where things are happening and we're having to make quick, rash decisions to try to compensate for that, and this, over the last few years, we've seen this really prove itself out, with 2022 being such a volatile stock market year. A lot of people wanted to run for the hills. And had you done so, you then missed 2023, where the market rebounded and you were able to get back to basically a break-even scenario between January 2022 and January 2024. The market had recovered, and had you sold in the middle because you were nervous, you may have missed that upswing and cost yourself some significant money in the long term from an investment standpoint, and potentially paid taxes or other things you wouldn't had to have paid if you had just stuck true to your plan. So that's a large part of value that we provide as well, outside of just, do we buy this fund or that fund, right? So back to Vanguard's survey that they do and their analysis that they do, that behavioral coaching they view as being worth up to 2% total from a return perspective. And again, that's because we can help put the brakes on some trades that may not need to happen when the market is volatile, or whatever, again, taxes that you may be paid that you wouldn't have had to have paid otherwise, or penalties on retirement accounts, a number of various ways that we help save our clients money by managing behavior and making sure that any decision that gets made, it's been thought out, it's been vetted, different analysis has been run to make sure this really is the best decision. And that we're not trying to time the market where we may miss some of these good days or bad days, and have an impact on your portfolio, especially the good days, right? If we miss some bad days, well, then you got a little lucky there. But if we miss the good days, that can have a dramatic impact on your overall portfolio and your returns long term. If you're trying to move in and out and hop around. So, again, that personal financial plan tailored to you, and then behavioral coaching around that plan to make sure that we stick to the plan. Those two, according to Vanguard, could be close to 3% that you're earning or saving or added value, that advisor alpha, just by those two pieces alone. Another thing that's critical, and I think often gets missed, is just tax efficiency. Buying and selling things at the right time where we're minimizing taxes, or buying the right types of investments in the right places to minimize taxes as well. So there's a concept known as asset location. This is something that Vanguard also views as very important, and they're attributing about 0.5% or more to a value that's added here just by making sure things get put in the right places. So if you have retirement accounts and you have, accounts that are just in your name, different types of investments might be better suited for different places. Let's take bonds, for example. Bonds are traditionally looked at as a safe investment, but they kick off this interest, which can be taxed at ordinary income rates, so at a higher rate than some dividends or even some capital gains. So this is going to be highly specific to your tax situation. So something you want to make sure that you review with your advisor. But you want to make sure that, hey, if I'm in a really high tax situation, let's make sure that my investments aren't creating unnecessary taxes. And we do this by putting different types of investments in certain accounts that have different tax treatment. So if you're paying really high taxes now, but you think, hey, my taxes will go down in the future, then we can put some of these taxable things in your retirement accounts so that in the future, when you are paying lower taxes, we're pulling from there and we didn't pay unnecessary taxes all along the way. This also is something that we look at when we look at funds that pay out distributions like dividends, and or even looking at for tax-free alternatives, something like municipal bonds may be appropriate depending on your tax situation, as opposed to taxable bonds where you're paying taxes, and municipal bonds can be tax-free. So having that analysis done, looking at your tax situation and finding out what's going to be the most tax efficient way to manage your portfolio can again have a significant long-term impact on your overall financial picture, because we're not wasting money in taxes that's going to the government. That money's staying in your pocket, right? And then one of the other things we really pride ourselves on as advisors, and one of the ways we add value, is just the implementation of the plan, right? So we could have this plan, have these investment recommendations in place, but if nothing ever gets done, there was really no value created there. So we want to make sure certainly that we're managing fees, keeping fees as low as we can across the portfolio, but by implementing the plan fast, by getting money put to work, by buying some of these things, and using some of our resources to potentially get lower cost on certain products, or just getting the money invested faster so we're not missing some of these good days in the market, can again have good long-term impact on your overall portfolio, avoiding unnecessary fees, as well as finding good low-cost alternatives and implementing sooner rather than later. So we're taking advantage of that interest you could be earning or growth in the market sooner. All of those things can compound over time. And then, I know we've talked about this in other episodes previously as well, but just making sure that your estate plan and the transfer of your assets happens in the most tax efficient manner as well. There could be significant value there. Sometimes, depending on the family situation, could be, tens or hundreds or even millions of dollars saved by making sure that your estate planning and wealth transfer goes the way that it should. And so having a team, a CPA, an attorney, and a financial advisor all on the same page here, making sure that everything is being managed appropriately, and just setting up the right trusts and setting up everything in order. We spent some time in a previous episode talking about this family financial plan and how that all works. Those types of things are places that we really can add significant value. So going back to Vanguard there, you look at some of the asset location or implementation strategies at 0.5%, that planning, and the behavioral coaching between 1% and 2%. You can see where that an advisor can really earn their keep. Now, I'm not saying that all advisors do this, and you want to make sure you're getting these types of services from your advisor, right? If all your advisor has done for you is just manage your investments, then they may not be worth the fees that you're paying them. So that's something you want to make sure you're getting from your advisor is this type of advice. You look at Vanguard's model, again, they're known as being one of the most low cost investment providers. Fees are important to them. They're, just investing somebody's money in a well-diversified portfolio, basically adds no value, right? That's something that you can do on your own. There's a lot of online services that would be cheaper than hiring someone like myself if you're just looking for that investment management piece. But if you value the planning and the behavioral coaching and some of these other more nuanced areas, that's when an advisor really shows their value. So again, if you're not getting some of these things from your advisor, you may want to either ask about them or look around for an advisor who does offer these services. Really our goal is to take that 30,000 foot view of your entire financial picture, build a personalized plan, and help you stick to that plan over the long haul. If this type of advice sounds appealing to you, you can hit our website, wittenbergwealth.com, or you can always call or text me at 801-839-7056. Please remember to share with your friends and family and to subscribe to the Wealth of Insight podcast.
Thank you for listening to the Wealth of Insight podcast. Click the subscribe button below to be notified when new episodes become available. Securities offered through LPL Financial, member FINRA SIPC. Investment advice offered through Stratos Wealth Partners, a registered investment advisor. Stratos Wealth Partners and Whittenburg Wealth Partners are separate entities from LPL Financial. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Whittenburg Wealth Partners. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning.